Good afternoon, everyone. BC Richfield here, coming to you live from Suffolk. Apologies for the slight delay. We're off-site for a couple of weeks with some family. Good morning, Bern. Good morning, Sherry, Carlo. How are we doing? Deep apologies for being late. Having a couple of technical issues this end with the travel setup. So hopefully everybody can hear me okay. Please do let me know if there's any issues with the audio. Going to add some visuals for you as well. Brian, good morning. Marta, Zaid, FR33 Will, and the legendary Crypto Burb himself. What an absolute honor it is. So let me share some charts with you and let's take a look at what we think Bitcoin's going to do today. We're going to condense this down into a little bit of a shorter session. I'm going to try and get this done in 30 minutes for you guys. So there's tons and tons to get in that time. So huge good morning to everybody else that's joined the stream. Mike, all the way from Miami. Fantastic. Sound is good. Lord Tang, my good friend, Green Star. Fantastic. So let's make this a nice full screen and let's dive straight into the charts. Guys, like I say, I'm traveling at the moment, but could not resist obviously being with you guys for this week. So please bear with me. If there are any issues, please do let me know. Question, what is the travel setup? So the travel setup at the moment, which I wish I could show you, is the laptop, the travel gear, the microphone, bits and pieces like that, all kind of hashed around. We're staying away in this cottage we go to with family. So I make this kind of hashed setup that's between bedside cabinets, chairs, tables, and all kinds of stuff. I'll take a picture for you guys and share it on socials later. So quick sip of my tea and let's dive straight in. So please bear with me. I'm going to flick between screens. I haven't got my usual setup, so I'm running this all off a laptop. So I will pop back to look at your comments. But if there is obviously anything, any questions you've got, I'll pop back regularly and we can take a look. So let's dive straight in. Now I've gone straight onto the 4-hour chart here. Okay, so I shared a few thoughts this morning on Twitter and obviously in a little bit more detail with our community at the Nest. As we've been looking at price to expand up into this fair value gap, right? So let me label this up for you guys so we're nice and clear. So this is our fair value gap, our inefficiency. So I always label them up like this so we know exactly what we're looking at and on what time scale. So what we can see here is price was obviously ranging in this tight compression for quite a while. So when we get these kind of breakouts, myself personally, if I want to play this, because this has taken off before I'd be looking to execute this, I'm not a huge fan of big pumps over the weekend. And what we'll notice is the largest part of this expansion that we got here actually took place on Sunday, all right in the run up to midnight. So how can we play these kind of setups? Right, what would I be looking to do to go long here? And where do I think we currently are? So let's dive into this a little bit deeper. Okay, now if I was looking at this as a range, okay, let me show you what I would do here. So I'm going to take my Fibonacci, all right, which you can find over here on this menu for anyone. This is the fib retracement. Now, I like to see an impulse move, right? So either a big pump or a big dump. And we can see here, obviously, we had this expensive move to the downside. Then what I'm looking to do, I'm looking to trace from a clean low to a clean high, okay? So we're going to take it from that low and we're going to take it up to this high, all right? So that's this high here. Now we can see how price as it's developed. Let me zoom in a bit for you guys. We can see price as it develops. And what happens is this EQ or this midline, which we've got labeled up here as 0.5. And for anybody interested, a really easy way to get these ranges is just to get your fib retracement, set a 0, a 1, and a 0.5. Okay, and then when you drag it across, it gives you this nice range. Now, we're interested here in the midline, right? Now, I'll show you and we'll go into the lower time frames and discuss how we can execute these trades. But for me, I'm looking to take longs in the area down here, right? And I'm favoring short setups up here. Why? Because you've got to look at the risk to reward, right? If I'm longing something here and I see immediate potential resistance here, right, then if my stops realistically have to go under this prior swing low, or this one if we go to the lower time frames, and you just don't get that good a risk to reward. However, obviously, if you look at it down here when we have this market structure shift, all right, so let me label this up for you guys. So we've set this interim high here. Get that in our usual colors. We had this beautiful sweep down here. Okay. And what we see is as we're coming down, we're setting lower lows, lower highs, lower lows. This here punches up and creates a higher high. Now, when we've created a higher low here, yeah, this is where we can take some relatively low risk long setups. Okay. So, worst case scenario, we get rejected here and we're wrong, we lose our 1R. But best case scenario, we get a nice entry in here on the lower time frames and we can trade this up to the far side of the range, obviously being very aware of these naked or untapped highs and lows that we've got here. So let's pop back to the comments in case we've got any questions. All right, let's have a look. So Tino, hey buddy, good to see you on here. Zaid, you're very welcome. First visit from Craig Parker, fantastic. Welcome to the stream, buddy. Really, really good to have you here. If you've got any questions, please don't hesitate. Okay, Zaid saying in my month-to-month comparisons of Bitcoin and crypto, I saw patterns similar to this. Yeah, absolutely. So obviously price spends most of its time in a range. Yeah. So when we're looking at that, we're always trying to work out short-term plays, long-term plays. So I'm going to try and cover both today and show you where we're at. And Shari, so this is a really interesting point. So no leverage in Ontario, Canada allowed, looking for spot entries. Thank you. No problem. All right. Because spot is a really, really good way to trade. I really don't recommend anybody really goes over leveraging. You see a lot of traders do it, but obviously a lot of these traders have experience, using leverage in the right way. And I should put a stream together for this on you guys as well. What you want to do is if you're using leverage, you just want to make sure that you're not risking more in your 1R loss than 2% of your trading account, right? So say you've got $1,000 in there, then you don't want that stop loss to take you out for any more than $20. That's a really good, consistent way to trade. So thank you very much for that, Shari. And yeah, absolutely. Look for some good spot entries. For example, if we look at this chart where we are at the moment, where we've drawn these red lines, if once we get above that, you see here, right, that we got this really nice retest of the midline. Okay. What we got with this is we got this nice hammer candle. Yeah, let me zoom in on that for you a little bit. Yeah, kind of a little bit of a long side hammer candle. What you can see is these long downside wicks. We like seeing this because it's taking liquidity from these lows here, right? And what you'll notice is when we get this consolidation, candles like this, you can take these as entry candles. And I mean, you can get a lovely tight stop in below here, and then you can target the range highs, all right? Obviously looking to trim some profit as you go up. So that's a really, really good way to operate when you're in spot. Okay, so let's just pop back and field a couple of the other questions. C-Ron, hey buddy, good to see you. Mega Roboz, how are you doing? Half the world was well into Monday when price pumps. Yeah, exactly. When you say it was over the weekend, I assume it's UK time. Is that the frame of reference for all your time frames? That is a fantastic question, and one I absolutely should have clarified. Yes. So my time frames are based around UTC, right? So I'm looking at UTC midnight, and what we can see here, guys and girls. Sorry, if I say guys, by the way, I mean ladies and gents. So what we can see here is when we're looking at the price pump, if I just hold this on here, we're looking at Sunday, the 8th of Jan at 8 p.m. UTC 2000. Yeah. So that 4-hour candle here that we had this big expansive move on just as then as we opened the day. Now, obviously, we've got the weekly open here. Yeah. And also our daily open as well. So let's pop that on the chart, because that can always play a significant role. So that basically you're looking here for the UTC, the midnight open. Okay. So running that across. And let's label this up. We're just going to keep this as the weekly open for this one, guys, but actually, obviously remembering that it's also the daily open as well for Monday. Now, typically when price is trading above that, what we would want to see in a bullish scenario is for price to open, pull back a little bit, yeah? So it pops back down, allows us to buy in at a bit of a discount, and then again, we've got that risk to reward on our side pushing up higher. So we're going to dive into this in a bit more detail as we go down. Let's just see a few new questions. How's the new chair? So, C-Ron, you weren't here for the beginning of the stream. I'm actually away with family at the moment. We come away for a nice little break in a place called Suffolk in England. It's a beautiful little coastal area. And so the new chair, which is beautiful, by the way, Secret Labs chair, is sat at home. And at the moment, I'm kind of sat on a little cottagey chair with the setup hanging off over like a little bedside cabinet that we've got in the room. We always obviously bring a signal booster and that with us as well to make sure that we've got the best possible signal for you guys. So Zade, good question. Yeah, perhaps think of adding a visual overlap of your time zone. Yeah, I could add that to the charts above. Actually, that's a very good point. And Farouk, what is Monday's range? I'll run through that with you as well. Perfect. All right, guys. So I'm going to flick back onto the charts now. Obviously, keep your questions coming. I will pop back and forth to get those. So while we're here on the 4 hour, right, this is the range that I'm interested in here on a 4 hourly scale. All right. Now that we've popped back out of this, what would I want to see in terms of going long? So first thing to say is we've got this fair value gap here, this inefficiency. Price likes to fill these. But we always want to be cautious when we're approaching a fill. We can either see a corrective move back down, all right, or we can see a pop out of the top, almost like a bit of a deviation before a correction. Now, what we notice here with price as it moves is, and let me just get rid of this, is price moves up in stages, right? So what we get here is we get this little pump, yeah? So let's do our pump in green. And then we get this consolidation here, right? We do that in orange to symbolize a consolidation. All right. And then price pumps again here. So we can see this in green. Yeah, from the consolidation up to here, we get this nice pump. Price comes back down, consolidates again. Right. So as we can see here, price is impulse higher, consolidation, pushes higher again, consolidates again, pushing higher. So we can see this kind of staircase pattern emerging. So what would it be the shrewd thing to do in a situation like this? We obviously wouldn't want to run in as price has already taken off, because the chances are that we could see a pullback here, right? So what do I mean by that? Well, I mean the price comes back down here, ranges around a little bit. Then what we'd be looking for is price to dip down to take liquidity below the lows that it set in the consolidation. Very similar to like we did here and like we did here, all right? These are your liquidity grabs, right? Or the run on the stop losses that are sat underneath there. Why do we have those run on stops? The run on stop is to generate liquidity, right? If you've got large players, institutional orders, or smart money as ICT would call it, then whales, hedge funds, etc., then they have really large orders to fill. And the thing is, what they need is a lot of orders, right? So how do they generate those orders? Well, they take out stop losses, right? Because obviously, if they want to be buyers, they need a lot of sell orders, right? So how you generate sell orders, people that were long here, yeah, forgive my terrible arrow, but people that were long there have stop losses ranging below these kind of lows here, yeah? So when you have a purge down like this, that activates those stop losses. What do those stop losses become on a buy order? They become market sell orders, creating a load of liquidity down here, yeah, to fill substantial buy orders, okay? So what I'd be looking for here is something similar. Price to consolidate down here, come back down, right? And then if we look to reclaim the weekly open and daily open, then I think the likelihood is that we trade higher, okay? So let's clean this up, take a quick look to see if we've got any questions here before we dive onto the lower time frames and give you my thoughts on what we'd be looking at for entries. So, Nipar, good afternoon, my friend. Tea absolutely poured. Wait for it. Nice China cup today. I always find it difficult where to enter a trade. What is a good indicator for an entry candle? Any Yorkshire tea about from Dan P, you legend, you remembered. I'm very good, thank you, mate. Very good. Dan and Nip, fantastic to see you back on the stream, guys. Yep, Yorkshire tea is on the cards today. Actually, I think I'm lying to you, Dan. I think it's Twinings today, which make a very good breakfast tea. Not my tea of choice. You know I'm a Yorkshire tea boy, but it's still a very, very nice cuppa. All right. So let me take a look at this. Okay, so we had some really good questions come in here. Farouk is saying as well, isn't there a 4-hour order block there as well for a potential long? Yeah, absolutely. So we're going to dive into this on the lower time frames, and people that are saying they're struggling a little bit for entries, good indicators, bits and pieces. Let me show you what I'm looking for here. So I don't typically use a lot of indicators. What I've got on my chart today, though, and a very, very big shout out to Dr. Fuse. Okay, you can find him, pop across onto my Twitter. Really, really nice chap, makes these indicators, allows me to put my name on this up here, right? And what I'll do is actually I'm going to add UTC to that as well, so people know the time frame I'm trading. And when we go on the lower time frames, you'll see these time sessions or kill zones, right, which is typically the areas that I'm looking to trade. So let me share this with you on the lower time frames. This might help you kind of refine how you take these entries, and I'll give you guys some examples as well. First of all, before we do that, remember, if we're going to be looking for longs here, we could be looking for a pullback to this area, and then As Farouk very, very rightly points out, we've actually got an order block here, yeah, or where we assume that there's going to be orders. So let's mark this up for you, which is in here. Okay, so we make that our order block color. Nice dark blue. And again, this is where we would see orders residing. Now, when we're telling the story of price, what else is significant? Well, what we're looking for, or what I'm looking for, sorry, as a market is moving, is I like to play retracements to a key level where I believe price is going to kind of come back to consolidate. And then I'm looking on the lower time frames for price to have a market structure break to the upside, obviously, if we're trading long. And then I'm looking to get in either on what I would call a breaker line or a breakout line, or for a retracement to a fair value gap. But as we're telling this story of price, let's very quickly mark this up on here. All right. Because like we're saying about, we've got our fair value gap up here, which we can see is our larger 4-hour one, which price has been drawn up to from here. So what we obviously don't want to ignore are the smaller ones as well, right? So we've got this one here. And these are going to be in grey. So what's interesting here, and let's label this up as well, is this kind of helps play into our theory here that if we're talking about price consolidating or pulling back, yeah, to generate more liquidity for longs, then this kind of gives us a decent target here. We've got an order block under here. We've got a fair value gap. In an ideal world, you'd see a purge through this, filling this inefficiency here, price coming down to this area, right, before building up. And then what we'd want to see is just a little purge of those lows. Price reclaim the high that takes out the lows, right? Because what that's showing us is if this price has taken out the lows here, it's grabbed liquidity. If it's now showing strength and impulse move higher, that's when we know that we can get some high probability entries. Obviously, it doesn't work all the time. Nothing in trading does, right? But that's what I'm looking for. The only other indicator really that I use, I have these on here that I have a play around with, but to be honest, the only one I really use are divergences, okay? So what we can see here with our B Pro is how well it helps us kind of catch these moves. Now, what I'm looking for and what adds a lot of confluence to my trades is I'm looking for reactions at key levels, right? So we're talking about key levels. Let's take a look here. So what did we get down here with this bullish divergence? See this red line? That's our key level down here. And we've also come in at which time we've set this area here, right, where we expect there to be orders. So where else, and in fact, let's label that up as green so we can see that's bullish. Yeah, so we get our divergence. That means this candle is then tradable. Do we have an immediate target? We absolutely do. This beautiful untapped high here, right? Again, we'd look to execute this on the lower time frame. So I'll label a few of these up and I'll show you what I mean. Again, we get this one here. We reclaim the channel EQ, gives us a beautiful long opportunity. Where to? Into the liquidity resting above these highs here, okay? Obviously, we target the range high, but we don't always have the expectation that it's going to get there, right? Price will do what it wants to do. What we want to do is get ourselves in at good levels and then set realistic targets so that we can trim some profit, move our stops to entry, and have the rest of the trade risk-free. So let's take a look at some more. So we get these divergences here. Yeah, we come back up here. We don't reclaim the EQ. But on this one here, we're within this divergence. When we come up here, right, now I know we've got our bearish divergence here, but something I love about B Pro is it takes a number of oscillators, more than 10, I believe. And then what we get is this percentage tells us all of those combined, the percentage chance, so the weight behind that divergence. See this one here that led to this huge pump to the upside? 91%, right? This minor corrective move here, because divergences are incredibly good, as we can see here, here, right, at catching corrective moves in ongoing trends. So they can warn you that a correction's incoming. As long as you've got your level and you've got your strategy, coming into the EQ, we hold the EQ, get this beautiful candle, we can look to trade to the upside, all right? So we've got these here. We've got that on our channel EQ. We've got these two warning us to come up to here, which means this is where we look to take our trade. We got a trade opportunity here and also here. So let me turn that off just so that we've got that nice and clean. Or actually, what I do want to show you guys, sorry, is the daily as well before we quickly move on and then look at executions. So this is what I love, right? Look at this B Pro divergence down here, right? It catches this. We purge this key level here again on the reclaim and retest of this. What a beautiful opportunity to go long. And where to, we'd be targeting liquidity above these highs, right? So this is a really nice trade that we've got here. Again, catches the corrective move. Lovely. What happens? Price draws back into a fair value gap, which is here to here. Right, we see how well that's respected. We get this bullish engulfing candle, lets us know that price is probably getting ready for a move higher. We can look for our entries in there, right? And then, as we said, we've got lovely upside targets here and here. But look at this bearish divergence here. Once we've taken out these highs, lets us know that price is looking to come back down. Again, we monitor price, and when we have this deeper correction, we get this lovely daily bullish divergence here, right? That lets us know that we could be looking to get into a bullish trend. So let me just pop on some questions, guys, in case we've got any on here, and then we'll get on to our executions. So let's have a look. Nipar, pyramid kind always. You love your pyramid PG tip bags. Fantastic. So let's have a look back on the charts here, guys. And if you've got any questions, do let me know. So we did that. We can see here that this is favoring a bullish trend. So again, we can look for bullish setups. We'll pop back to our 4 hour very quickly, just so that we can get our idea in here. I'm going to turn B Pro off now in terms of just keeping the charts nice and clean. And what we can see is that when we got our early warning signs down here, we've actually played this bullish trend really, really well. Now, we've taken out liquidity above these highs, and we've now broken out of the range high. We're now saying to ourselves, well, if we get a corrective move back into here, right, then we can look for potential long setups. Obviously, if we purge through this level, then that can be a sign of weakness. So we would then be monitoring for this fair value gap lower, and obviously any liquidity residing below these lows. Okay, so let's drop down to a 15-minute chart. And what we're going to do is we're going to cycle back, and we're going to have a look at a few trade setups that we've got on here, all right, based on our green dots. So here we go. So the range was set here, obviously, as we can see, from the low to the high. We had the purge to the low. When this high is set, this becomes our range. Now, what I have labeled up down here, and there's a few different indicators you can get for this one. Like I say, I've just recently using Dr. Fuses, who's a guy that I've got no affiliation with at all, other than the fact he seems like a really, really nice person, and makes some really damn fine and clear indicators, right? So what I've got labeled up here is the New York AM session, lunch, and then the PM session. These are the areas that I'm looking to get trades. And what do I want to see in these trade periods? I want to see my divergence, yeah, which I'm getting from B Pro. Then I want to see this shift, right, in this area here. Now, let me replay this, right? And then we'll drop this down to a lower time frame, okay? Now, I'll look to execute these type of trades between a 5-minute and a 1-minute chart. And what is it that I'm looking for? Now, I'm going to start with the M5 chart because I know a lot of people are building their trading around working full-time jobs and other commitments, all right? So trading these type of timeframes makes it a bit more realistic than trying to kind of get entries on the 1, 2, 3-minute chart. So what we can see down here, price comes down, sets this low, right? Comes and sets this higher, higher low, right? So what I'm looking for here is for a break of this high, aligned with this one here. Before this happens, I want to see price do two things. I want to see it have a raid, right? Now, what's a raid? So let me just draw this up and I will explain. So what I consider a raid to be is when price takes out liquidity from a level that isn't its immediate swing low, right? So if we drop down the lower time frames, what we can see is we got this 3-candle pattern. And let me zoom in so I can show you this. What I consider a swing low and a swing high. So I keep it really simple. So this is a swing low here. Why? Because it's flanked either side by 2 higher lows, right? This here is a swing high. Why? Because it's flanked by 2 lower highs, all right? So you get this V. Now, this is a raid because this low here, where we've clearly got some liquidity that's built up from here, isn't the immediate swing low. That would be that one, right? So a raid is on a previous or historical low, which can go back quite a long way, all right? But you want to see that liquidity purged. And then I want to see a sweep of a local swing low, right? So for me, that's this candle here because we've got the low in the middle, higher low, and a higher low, right? So this is our sweep. And we put this back in red. So sweep after a raid within our time zones here, yeah? Then what we want to see is an impulse move above. We get this nice bullish candle punch above this level. When that happens, this becomes our breaker line or breakout line. Breaker line is just a name that I call it, right? Lots of different terminology for it. But what we're looking for here is for price to impulse break above. Then we want to see when that happens, and this candle closes, our limit order goes in on this line here. All right. So price punches above. When it closes here, we already know what that level is. So we've got this set up on our exchange already ready to go. And I use Bybit, henceforth the Bybit charts. I think they've got really good liquidity. And yeah, I think the interface and everything is really, really clean with them as well. If it's something you're interested in trading along with me, you can find information in the description on YouTube, all right, or come and hit me up and give me a shout on Twitter or over at The Nest. So how do we trade it? Breakout above, limit order goes in on this line, right? We get filled on the very next candle. Sometimes that doesn't happen. Sometimes it will take several candles and then it will retest, right? Our stops go below this low, all right? Now, where would we target? So we always want to be consistent, right? So consistency for me is key. So as I've described through all the different time frames, my thinking doesn't change. I'm looking for the shifts in market structure. I'm looking for what's drawing price higher, okay? So I'm looking for key liquidity. Now, this, even down on a 5-minute chart, we can see here, we've got our fair value gap. So we're entering in here and we've immediately got this target, a target 1, with this beautiful untapped high. So let's draw that as our T1, right? Then where would our secondary target be? Would the liquidity resting above these highs? Now, we drop this down here, we can see that here, and there's a number of them really, but we've got relative equal highs. Now, I just label these up as equal highs, right? But the key thing with this is that price has been stopped here once. We can see where we've got this. Fine, price has run these, but there's clearly liquidity up here. We can see where we're getting multiple rejections. So this then becomes a beautiful secondary target. So we're saying this is the higher here. Draw this across, and this would become our secondary target line, okay? So let's make sure we're consistent. So here we go. So how would this trade look then? Let's take our long position out. This is our entry line that we got on the retest, right? Stops go here, or you could be very conservative and put them here or underneath the liquidity line here, because we're saying that we don't want to see that taken out. Now, let's go for the super safe option, right? Because these markets can be very volatile, especially when we're dealing with low liquidity. And up to our first target here, we've got a really nice 2.5R trade, okay? And then when we're talking about our extended target, which is up here, we can see that that's a 6.4. Now, please be careful when you're dealing with low percentage moves, right? Like this up to here is a 1.52%, and this is a 0.23. So what we want to understand is what the cost of our position is, right? So for that, I use my very, very good friend Razoon's indicator, right? So position size manager, not so much of an indicator, but an absolute brilliant piece of kit that's made by one of our many little geniuses that we have in house. So you place the first line on your entry line, the second line goes on your stop loss, and the third line goes on your target, right? Perfect. Then you get this beautiful little box comes up. It sets you up with a basic account of $1,000, tells you what your 2% risk is, which is $20. Then it makes all the calculations you need to understand that this risk level here, this 1R, yeah, which we can see mirrored here, yeah, this 1R is $20. So if we lose $20, but we also lose our trading fees on our position size, which is this number here, yeah? So let's do the calculations quickly, and I think it's always a good idea to allow in and around 0.15%. All right, depends what exchange you're trading on as well, obviously, and what the fees are. So do make sure you're aware of that. But if we're taking an $8,307 position and times that by 0.15%, we've got $12.46 in fees. So let's remember, it's not just $20 we lose $20 plus $12, so it's $32. All right. Now, we need to also remember that if we get this trade, and let's say we didn't like what we saw when it got to this target. Obviously we did, because it had a huge impulse move through it. But let's say we were looking to cash out there and we would have trimmed some. Well, we also need to understand that when we do that, right, that we're taking some off of the trade. So we want to adjust it with this as well. And let's say we drag this down to here as our target, right? Then we can see as we come down obviously our P&L drops quite considerably to $48. So now we can see, well, hang on a minute, if we've got $32 in fees, and if we cashed out completely, we've got 48, that's how you're getting and establishing your real R, okay? So I hope that makes sense. If you're a member of the Nest already, please do hit up Razoon. I know he'd be happy to share that indicator with you. And if not, please do check out the links in the description, guys, because down there you've got links for free trials and all kinds of goodies if it's something you're interested in. So I hope that's made sense. Obviously, looking to keep this a little bit punchier for you. So let me just field some questions before we shut up this Monday stream for today. And remember, I'm going to be back on Wednesday as well. We do a little bit of a longer session on Wednesday, and we'll take some of your alt requests as well. So yeah, I'd like to know what time frame your execution is. So Farouk, good question. I aim to execute between a 5 and a 1 minute chart, but typically I favor sort of probably 3 minute chart is probably a sweet spot for me. All right, especially in terms of looking to give yourself a little bit more time. Obviously, the 1 minute can move incredibly quickly. I typically execute traditional markets like ES and Forex on a 1 minute chart. It just tends to move a little bit cleaner for me. And then Carlo, can you do the Cardano chart? I'm really, really sorry, buddy. I'm not doing requests today. I'm unfortunately got a really, really busy day. Or not unfortunately, fortunately got a busy day with a lot of my mentoring students and a lot of other really cool stuff going on over at the Bird Nest. But on Wednesday, my friend, I will absolutely smash that out for you. And then on the black chart, yeah, sure, I can cover that for you quickly, mate. What you want to do is you want to just get on the candles, click on those candles, yeah, and then symbol at the top of your chart settings that comes up. Take a little look at this, right? So body, I go white, black for body, and then everything else is black, yeah? And that just gives you a nice little setup there that keeps it clean. I read a while ago, actually, and I'd love to get Jimmy, such a beautiful human, Jimmy, and a wonderful trader, but a world-class psychologist who's our psychologist over at the Nest. You guys are probably in. He's an NLP coach, and I'd love to run this past him actually, because I changed my charts a while back to white and black because I read that red can be quite a trigger for our mentality, right? So red and green charts on a black background can kind of make us feel a little bit enclosed, and red is obviously a trigger mechanism for us as humans. So I moved away to these. I just found it quite calming actually. So I hope that has helped as well, mate. So yeah, the indicator is the Burbicator Pro. You can find out some more information about it. Do come and hit me up. Send me a message at Twitter or over at the Nest, and I'll send you some info on it. Carlo, thank you, buddy. I will cover that for you though, mate. I really, really will. And Craig, really like your style. Perfect knowledge to share level for me. It's a regular Monday time for this post. Really like to join. Thank you very much, Craig. That's really kind of you to say. It absolutely is. Midday UTC every Monday and midday UTC on a Wednesday as well. Sometimes the Wednesday session might move to 1 p.m, but I let you guys know nice and early there as well. And I've got the same setup and it looks good, but maybe not as clean as well. Fantastic. You will get there, buddy. And always appreciate everybody that jumps onto the streams. One more question, and then we're going to shut this one up. And do you enter on just order blocks, or do you wait for price to come to an order block and wait for a structure shift on a lower time frame? That's a really good question. And if you've got a chance to jump onto the screen on Wednesday, I'll show you what I do. But I typically exactly that, look for higher time frame order blocks, and then I look for price to break structure on a lower time frame, and then again get in either on the breaker line or a little retrace to a fair value gap. So thank you to everybody that's joined the stream today. Apologies, it was a couple of minutes late due to some technical issues at the beginning. I hope you guys have found it useful. If you have, please do check out the information in the description. Come and join us at the Nest. It's a wonderful trading community full of really, really knowledgeable professional traders, and a fantastic community that are dedicated to learning. At the moment as well, because we understand times are very tricky for a lot of people, we do have a call service, and you can join that for free. Now, I don't ever recommend anybody relies just on calls, right? I don't. We're doing it as a support function so that people can earn a bit on the side, and then they can also focus their time and energy into learning, right? And we post all of our statistics. They're all available. We post them on Twitter. We post them. They're live at the Nest, right? We always share them. We're completely transparent, all right? So if you've ever got any questions, do please come along and give us a shout, all right? And then, Mr. Brownbug, how you doing, bud? Good to see you on there. Goncalo as well. You have a great year as well, everyone. Farouk, McRule, can't find the B Pro. No, it's a private indicator, mate. If you've got an interest in it, you can find it over at the Burb Nest website. Okay, let me just pop that on here for you. So that's birdnest.com. All right, pop on there, or come and grab me on Twitter. I'll send you guys a link and bits and pieces through as well. So I'm afraid I've got to shoot off now, guys. Deep apologies for that. Do come and grab me on Twitter. If I get a chance later on, I'll put some posts out or some charts for you. So do come and hit me up if you've got any suggestions. I know C-Ron wanted to take a little look at a few bits and pieces, maybe Gala, and there was another request earlier as well. And then Bernd, BC, please spend some time on break of structure. And change of character. Yeah, absolutely, mate. No problem. On Wednesday, come and dive into me, guys. We'll spend as long as we absolutely need. Make it more of an education-focused one as well. But please do remember that today, we've had this big breakout now. Don't go FOMOing into trades. Even if the thing keeps running and running and you say to yourself, oh, no, I should have got in. Definitely don't think like that, because the chances are very heavy that it turns and corrects on you, all right? So there'll always be opportunities in the market. Just make sure that we're striking while the iron's hot and the odds are in our favour, all right? So once again, thank you all so much for joining the stream. I appreciate every single one of you. Have a fantastic week. Come and catch me over at The Nest and on Twitter, and I'll catch you guys again on Wednesday.